Trump's been pitching a corporate rate of 20%. President Biden wants to raise it up to 28. Doug Flynn joins us, certified financial planner, co-founder at Flynn Zito. Thank you, Doug. We'll put up on the screen here just so people can see where the corporate tax rate is now is at 21, right? So as I say, the Dems kind of want to go to 28. The GOP targeted rate, they say they want to go to 15, but Trump says he can live with 20. Now, what I saw is like, each percentage point, they say, is worth more than $130 billion in tax revenue over a decade. So I guess it really matters how much you fluctuate. But your views on corporate taxes?
It does. Well, if you remember where we were before the tax cuts, it was at 35% for the U.S., and that was kind of high. And so, they got all the way down to 21. So I guess they agree, the Democrats, that is, that 35 was too high, even though they didn't say it at the time.
Right.
And now going back up to 28 is better. But yeah, the 10-year number is what you're quoting there, because actually it's a $1 trillion difference between these two proposals. Trump's is like a $13 billion cost per year, and Biden's increase would be like over $90 billion per year. So that's a $100 billion swing if you take that over 10 years, which is how they do all these numbers. It's a $1 trillion difference, but that's the annual cost. So, I mean, 1% is like a rounding error when we're talking about the size of what the U.S. does.
Remember when it was up, you said at 35, that all these companies would go to Ireland, right? Because it had a very, very low corporate tax rate, and they would incorporate there at 12% or whatever it was, something like that, right? So
we had a lot of inversions. We had a number of inversions.
They call it, right?
Exactly.
How
and
do
that's
you avoid that? Can you do? It's stopped now, right? At 21. So if you're at around 20, 21, you're fine. If it goes back up to 28, though, do the companies start pulling that again?
Perhaps. Definitely at 35. We were starting to see that at 28. It's arguable. I don't know exactly where the line is when companies do the math. That's what it ultimately comes down to for the shareholders. What is the best way to run that company? And that's what it comes down to. They have a fiduciary responsibility to do the best thing for their shareholders. So if that means taking it somewhere else, they will. There's probably the proper amount in there, and we could argue about it. I think, a 1% move, what it really is just to say, one side wants to lower the taxes, even though it's 1%, and one side wants to raise them. I think that's the divergence here. Right. It's the smallest amount you can get away with and still say you're for lowering taxes.
Right. That's what Trump has done. He hasn't gone all the way to 15, which I thought was interesting, like other Republicans. Let me put up the federal income sources. In other words, how the federal government brings in its money through taxes. And this is from estimations. They say you have individual income taxes, and then you have corporate income taxes, custom duties as well. And the reason I put that up there is because I want to talk about tariffs a little bit. Donald Trump has this plan, apparently, Doug, where he wants, I don't know if he wants to get rid of it, but he's thought about getting rid of the federal income tax and then just replace it with tariffs. You're laughing already how Trump's 10% tariff will filter down to U.S. consumers, because that's the point, right? We've always been told years ago, and usually by Republicans, by the way, that's just changed the last few years. They used to say tariffs are a tax. But now, because Trump's for it, they're all for it. Here's Janet Yellen, the Treasury Secretary, critical of it. This is from The Hill. She says the impacts would be to make life unaffordable for working class Americans, and it would harm American businesses. What do you make of tariffs? Because it's a lot of Republicans now for them.
Yeah. I think what it comes down to is, and first of all, we have to take with a grain of salt what Janet Yellen says, because of her comments on inflation being transitory. So, that clearly did not pan out with what she thought over there. So I don't know how much of an impact it's going to devastate people. I think some studies said it's about a $1,500 average cost for the average family. And while that may be true, everything's done straight line. We don't know how much more onshoring, how much more purchasing decisions will come back to the U.S. So maybe that gets offset. We don't know. But the bottom line here, I think, is that tariffs basically account for 2% of the total income to the U.S. Personal income taxes, 50%. And I think, Trump is all about just saying things about the direction and not necessarily the detail. Obviously, you can't fully replace it because the tariff rate would have to be so high. We would be a horrible trading partner. That would be a big problem. But perhaps there's room, I don't know, I haven't done the math, to move the 2% revenue to the U.S. to 3%. And maybe that does lower individual income tax because, as we all know, 98% of the taxes paid in the U.S. on a personal level are paid by 50% of the people. 40% don't pay anything. Right. And so obviously those are all the numbers that are mixed in there. Perhaps there's a little room to move it. It's a talking point. We've done the same thing for so long. At the end of the day, the government spends 23% of our GDP, and it's way too much. That's not sustainable. So one side wants to grow our way out of it, other side wants to tax our way out of it. I don't know. Perhaps there's a combination there. It's just talking about the conversation, and that's what a lot of this is.
It is a good discussion, and it's a more substantive discussion you and I just had than they'll probably have on economic policy at the debate next week. Be that as it may, we thank you for participating, Congressman Flynn, again, in that, as
My
always.
pleasure.
Doug Flynn with us today. Now this.